Welcome everybody, Money in the Tank episode 51. Today we're missing Big Jolly. He's otherwise busy. I couldn't actually remember the reason. I know that he had a good reason when it went blank, so I'm going otherwise busy. But he was here for the 50th. And so Arnie and me have decided to take over the 51. Good episode today. As we discussed in our 50th, a bit more short, sharp, succinct. We'll try to, even though Arnie and I are known for having a chat.
Love a ramble.
Love a ramble. But after Rivkins, we're going to be spending today's majority time on the FTX saga that's going on, and I've got a bit of preparation for you today. Arnie will jump into the midterms. We'll have a bit of a yarn about that. Arnie will jump into the quickfire news. We'll have a bit of a yarn about that. And then we'll wind up with a 50-50, as we always do. But without further ado, I'll throw over to for introductions.
Arnie, finance professional. Thank you, mate.
I forgot mine. Brad, startup guy and journalist.
And if you want if you want to get us, you can get us at Money in the Tank on YouTube, Instagram, Twitter, and Facebook. And just a shout out to Vin. I threw out a personalized tweet to Vin the other day because he said I want more MIT tweets. So I'll be getting more active on the MIT Twitter account. You can interact with me there if you want, Vin. So
there you go, and no doubt start increasing activity on Twitter and helping your mate Elon.
Oh yeah, bloody oath, he's my mate. He needs all the help he can get.
He does.
Got some more news about him.
He does need a bit of help at the moment on Elon. Are you going to be talking about his $4 billion sell or?
Oh yeah, we could talk about that. I actually hadn't included that in the news, but yeah,
you can include it in the news. No, let's include it in the news.
All right.
Let's jump into a bit of Rivkins.
Oh yeah, you got one handy. Yeah.
Got one handy. Always have a backup couple, in case Big Jolly. It's going to be funny one for interruptions as well, mate. For me and you.
Should we just suspend it for this episode? No,
can't do it. Okay, we're going to be starting from Rivkins. Right, let's get in the zone of interruptions. All right, so Rivkins, this is the hardest rule of life in brackets stock market, but I believe I've solved it. You sell a stock when you're happy. If you bought a stock at 30 cents and you're happy that it's gone up to 45 cents, then sell it by all means. You've made a profit and you're happy. Forget that it might go to 60 or 70 cents. And it's one that I actually really, really believe in. Big Riv's, it's been nailing it lately for me personally. Been agreeing with Big Riv Dog. But there was a resource stock, Melbana, that I got into start of the year, it was last year now. And look, it's a penny stock, right? It's resources here in Australia. And got in at I think 1.9 cents and got the rights issue at 2.2 and it ran. It was around 14 cents. And I was like, not very often do I do a 7X myself. I'm happy to sell. So I sold about 30-40% of my holdings. And it ran up to 24. And everyone was like, oh, you could have, you should have, you would have. I was happy to sell at 14. And then over the last 6-7 months, it's dropped back down to 6 cents. So always, I'm a big fan of just being happy. You can always go higher and always go lower. Your thoughts, Hans?
Yeah, I love that quote from Riv. I feel like always take profit when you can because it's I'm in two minds about it because I feel like you need to let your winners run a little bit. Like sometimes you don't want to sell too early because you will kick yourself. Even if Rivkin says you'll be happy, but then at the same time take profits. And sometimes I think the best way to do it is if you just take enough profits to cover your cost base and maybe then some, and then you can let a little bit run like you did. Like you took roughly half off the table. And then you could just see where it goes, and that's cool. But the converse or the inverse of that quote, which is something I've heard a lot of people say in this space, is if you buy a stock at let's say at 30 cents and you like it, and then it drops down to 20, you should love it. I know it psychologically it hurts.
Unless the theory, oops, that's $2 for me. I'm right there. Bang. Not long in. I'll do it.
Playing catch up because I'm well ahead on the interruptions piggy bank. We need to get a bit of a running total. I think I'm $8 worth now anyway. But yeah, so I love it from Riv. And keen to jump into this FTX news because I've been following it pretty closely. And obviously you're following it pretty closely because you're the crypto guy.
Yeah, no, definitely. I'll jump into that. What I was going to say is, unless the theory changes, because a lot of people at the moment talking about, say Tesla, and has the drop and has his kind of focus on, outside of Tesla and him using engineers from Tesla into Twitter and all the rest of it, has the theory changed? Because that's the only reason why you'll sell at a 52-week low. And my guys say no, but
can I jump in there?
Yeah.
Yeah. I think I talk about Tesla a lot. It's an excellent case study for these kinds of things, and it's not financial advice. It's general in nature. Everyone do your own due diligence on this stock. I obviously have looked at it for a long time. I am a Tesla shareholder. I thought about selling when it hit, its highest ever, all-time high, when it was the most valuable stock in the stock market, and I didn't, because I still see future value there. And the reason I see future value in Tesla is because they are continuing to guide and aiming for 50% revenue growth, 50% deliveries year on year, and they've already given guidance as far out as the end of 2023 next year. They've been asked on 2024, but they sort of played it off with, we can't give that kind of certainty because of commodity prices and other inputs at the moment. So when Tesla or any company is growing at that rate and guiding for that rate, even in uncertain, difficult times like we're in right now, I feel like it's one of those ones where you need to give it the benefit of the doubt. And these small, I've said this before to you and Jolie, and I know you guys feel the same, but just for the benefit of the tankers in the pod, again, this is short-term noise. Like, yes, Elon's focus is on Twitter at the moment, but he also has all those other companies that we've referenced many times. And there's going to be points in time where his focus is on those. But Tesla is not one man. Yeah, there's key man risk, but it operates independently, or it operates with Elon, but it doesn't need Elon to operate at the moment. So I feel like if you're going to get something like him selling shares to fund what we think is probably something to do with Twitter, something to do with the Twitter debt covenants in the contract, it's kind of like a gift. I look at it like a gift, because Tesla's at 52-week lows. Am I tempted to buy some? Yeah, I'm tempted to buy some right now, because like we were just saying before, if I bought it at X and it's fallen, I love it now. So I still believe in the Tesla thesis. I do agree with what you said at the start of this, though, that the only time I would sell something like that is if my thesis has changed, and it hasn't. It's just short-term catalysts that are affecting the stock price.
I think that's key for me is the thesis. That's why I'm massive around kind of thesis investing, because it allows you to ride the emotional side of things. Yeah. So it kind of like removes the emotions out of it and allows you to kind of just focus on the stock, the thing that you're investing in at heart, because it's not always a stock.
One more point on that, which I'm not like, this is like rumor and hearsay, and we'll never know the exact specific numbers or prices, but people are speculating that if Tesla's share price were to hit a certain point, then Elon would be forced to sell like margin call style, because he would then have to do it to ensure that he could cover the debts for Twitter, and that would cause enormous selling pressure on Tesla. And if Elon was somehow removed as the majority and controlling shareholder, or like, I mean, I know between him and other stakeholders, but if he lost a big chunk of his holdings because of that, because he had to sort of cover the Twitter transaction, what would that do to his focus and intent on Tesla? I'm not sure. So,
I mean, even that said, I was watching I don't know if you called it the hour kind of that he spent with Barron Investments. It kind of was one of the big.
Haven't watched it. I've seen it. Like, yeah, Ron Barron, right?
I found it quite interesting. There's a lot of belief there by all the people that are providing the debt. A lot of belief.
Mate, if you were going to bet on a tech entrepreneur right now, I feel like it's an easy choice. Like, yeah, he's a volatile guy, but like, I feel like it's an easy choice for me anyway. But we're straying into my favorite topic too much, which is Elon. I think we should.
So we'll stray back, mate. We'll stray back. Don't worry about it. We'll stray back. We'll get into FTX. Hello, tankers. So this is the first off, which is a bit of an interruption. As we went to edit this video, there's been so much new news from the FTX saga. We've actually gone and created a subsequent little small video with all the updates in it, which I'll be placing at the end of this video. So the podcast will go on after this little interruption. But if you do want to kind of get the most up-to-date information around FTX, because so much changed, so much went down the rabbit hole, I thought I'd just include it in this one as a bit of a bonus. So go to the end of the video after 50-50 to see if that. Otherwise, just enjoy the pod. Thank you.
Interesting case, this FTX. I've been following the news.
So just for the tankers, FTX is, I believe, the world's second was how fast things move. Was the world's second largest kind of exchange for crypto. So you had Binance, FTX, I think Coinbase, and then it drops off quite big from that to like Kraken and a whole bunch of other ones out there. And so FTX was owned by a guy named Sam Bankman-Fried. He's been kind of, a guy that has been working with regulators, has been kind of a large donor politically to both parties, working inside America and the kind of the startup scene, involved in a lot of projects like Solana and the rest of it. Involved quite intimately with Alameda Hedge Fund, which kind of is the backer of many, and holds a lot of crypto, which will be involved in this. And basically, over the course of the past week and a bit, it's gone from a giant to basically out of business and bankrupt, no longer taking transactions. So this has hit crypto again, kind of like Luna, kind of like 3 arrows. The list goes on, and this is what happens, I guess, during when the tide goes out. A lot of the dodginess that's been happening during the good times gets found out, and kind of the stronger left. And it looks like CZ is playing chess, and everyone else has been playing checkers. He's been playing 5D or 9D chess. So what I thought we'd do today is I'll put together a bit of a PowerPoint presentation. So for those that are listening, I'll talk through it, but obviously it's probably easier if you're watching, because you can kind of get more content out of it. But I'll try and just chat along, and then I'll throw to you, Arnie, at the end of it and kind of get your thoughts around it. But this is the FTX and how we got here. So first things first. Sam Bankman-Fried, I mean, he busted out of the out of nowhere, really, when there was a new kid on the block when he started FTX back in 2019. Not long ago. When you really think that at one point it was valued by about 16 billion at the start of this year, when he raised $400 million from SoftBank and Masayoshi's son. Masayoshi's son not doing the best on investments at the moment with the Saudi money. And Binance, which had been created in 2017 by CZ, had really become the world's largest cryptocurrency exchange by that time. We jump forward to December, and Binance invested in FTX and said that FTX would help build out liquidity and institutional product offerings across the Binance ecosystem. So they kind of looked at it as help the industry, help the overall kind of crypto ecosystem. And with that, having some smart people like Sam Bankman-Fried and kind of projects related onto, there's probably going to be some liquidity benefits and institutional product offerings, and some smarts there. All was good until kind of 2021, when kind of Bankman-Fried and CZ, so CZ and Binance were getting absolutely smashed by regulators around the world, left, right, and center. It was actually pretty crazy. Like, EU was smashing him, Singapore was smashing him, US was smashing him. Everyone was hitting Binance at that point in time because they're the biggest, right? And usually when regulators are trying to regulate a new industry, they generally like to go after the biggest. So, around June, there's some comments made by Bankman-Fried when he asked for his kind of take on Binance regulatory issues. And he goes, look, I'm not involved in the conversations between them and the regulators. And so all I can do is speculate. But something I'll say is that we try really hard to be as cooperative as we can with regulators, meaning FTX. I think that when you don't do that, meaning CZ, and when you sort of appear less flexible or responsive, meaning Binance and CZ, I think there's more likely to lead to cases where regulators might feel like they have no choice but to start bringing in the hammer. His implications and his kind of comments were clear. And so at this point in time, just about a month later, I guess this is where the start of FTX troubles was started, but people weren't really aware of it. But back in July last year, in 2021, Binance, as an early investor, sold its stake in its rival for 2.1 billion worth of FTT. So FTT is the native token of FTX. So FTX. So it was a token launched by FTX. At the time, the move was seen as a logical parting ways. A rift had formed between Bankman-Fried and CZ, different views on approach to regulating crypto. Binance previously held a stake in exchange FTX, whose name token is FTT. So at that point in time, that's all that was really kind of known, is that they parted ways. It was about 2.1 billion equivalent. They don't know how much people invested early on. It came out later, so they made about a 1,400% gain at that point in time. And it was not all in FTT. So it was $2.1 billion. So this only came out on the 7th of November, I believe, this year, that CZ's come out and said, as part of the Binance exit strategy from FTX equity last year, Binance received roughly $2.1 billion in US equivalent cash of Binance USD, which is a Binance coin, stablecoin, and FTT. And so it wasn't all FTT, but bit of a mixture. Some people believe there was maybe some cash in there because they'd basically recently raising some money at FTX. So we jump forward. Between 2021 and 2022, Bankman-Fried became increasingly active in the US regulations as FTX grew bigger. He also became one of the biggest donors in crypto, and was second largest donor to US President Joe Biden. He donates both parties. His family's got a big history of donating money to kind of the Democrats, but just even in the midterms, he's recently donated a lot of money. As I don't know if the tank has kind of realized, but in America, if you're wanting to drive regulation and be involved in how things are going to be, I guess, what laws are going to be written, how things are going to be regulated, etc., and you want to have influence on that, you need a lobby, and to lobby, you need money. And so that's kind of the way that Bankman-Fried was getting involved to kind of understand US politics, whereas kind of CZ and Binance were taking more of a global view, not just a US view. So in October 2022, Sam Bankman-Fried came out and put forward a kind of possible digital assets industry standards. And that's on his Twitter, 20th of October, if any of the tankers want to go on there. But basically, it's kind of like a drafting and trying to kind of guide America, especially, but also the rest of the world in terms of where kind of standards and regulations should be. Let's just say that kind of CZ and him didn't see eye to eye on this one either, and they got in a bit of a spat. And look, CZ is a guy like kind of Elon and the rest of these guys online on Twitter that don't mind having a spat. They kind of see a bit of fun in it, a bit of like intellectual, debate and fire off memes at each other and the rest of it. Mm-hmm. It's an interesting world we live in, though, because you're talking about billions and billions of dollars on possible stuff. But they got in a bit of a debate about it, as others did. So there's no kind of just them. Then CoinDesk on the 2nd of November. So this is only about a week ago, just over a week ago. So CoinDesk report release shared some critical financial details from Alameda Research, the crypto hedge fund controlled by crypto mogul Sam Bankman-Fried. CoinDesk reported that they had obtained a copy of the hedge fund's Q2 balance sheet. And according to the company's reporting, its balance sheet is comprised of $14.6 billion. This is comprised of $5.8 billion of the FTT token. So he's got a hedge fund that's primarily funded by tokens that are created from his exchange. So remember that one. $1.2 billion in Solana, and 3.37 billion in unidentified crypto held, 2 billion in investments in equity securities. This leaves roughly about $2.2 billion in other assets. And so the possible flywheel, and I'll talk about that later on what that kind of actually means. So November 2nd came out, balance sheet got put on Twitter. People started questioning, the ability for FTX. So if they're holding that much FTT, and FTX is backed by, if people start trying to withdraw stuff, it's going to create some pressures between the companies. And will they be able to actually match how much they're actually supposed to be holding on the FTX platform? So a lot of people at that point in time said the standard 1% rule in crypto, which is as soon as there's a rumor, take your money out. And so November 7th, so about 4 or 5 days later, CZ came out and put in liquidating our FTT is just post-exit risk management, learning from Luna. So CZ came out and said Binance obviously holds a lot of FTT from that transaction they did the sell. Luna, we all know that went down. And so he's come out and announced that Binance will be liquidating all the FTT, saying that we gave support before, but we won't pretend to make our love after divorce. We are not against anyone, but we won't support people who lobby against other industry players behind their backs and onwards. Right? A bit of a quip to some of the regulation stuff that's been happening with Sam Bankman-Fried, and kind of saying, well, mate, you're out there calling about regulation and the rest of it and throwing kind of stones at me. Meanwhile, you probably have some corporate governance and regulation issues yourself. And then that date, November 2nd's wrong, so apologies there. So it's supposed to be November 7th. But Sam Bankman-Fried and Alameda respond. So it's quite unclear what Zhao, CZ, refers to as recent revelations. But Alameda CEO Carolyn Ellison, go check out her Twitter profile picture. It's quite interesting for a CEO of a $16 billion hedge fund. But anyway, it's the world we're living in these days, I guess. But Alameda CEO Carolyn Ellison shot back at him by tweeting that if he wants to minimize the market impact of Binance's FTC sales, the hedge fund can buy it all at $22, the current token, at $20, the token's current trading price. So basically what Caroline from there is trying to do is limit the harm of FTT, limit the kind of, the risks or the hyperbole out there that Alameda or FTX are in any sort of kind of, asset or capital problems, and saying to CZ, well, if you want to sell your stuff, instead of dumping it on the market where you're going to obviously lower the price, which inadvertently hurts them because that's their balance sheet, we'll buy it all off you at 22 and kind of, try and pretend that that'll become the floor of the price. She also added a couple of other notes, which was the balance sheet is just a subset of our corporate entities. We have $10 billion of assets that aren't reflected there. The balance sheet breaks out a few of our biggest long positions. Obviously have hedges that aren't listed given the tightening in the crypto credit space this year. People kind of responded to her saying, well, either put up evidence of that, otherwise you're just Enron. And started saying Enron said they had money in the bank as well. So, they're not just kind of buying that there's $10 billion of hedges out there unless you can put it up and show us that there is. So that caused a run on FTX. And at that point in time, CZ actually came out, consolidated his position across the top of the world. This is on November 8th, with a stunning move to take over FTX. So the suddenly troubled firm, led by its chief rival and one-time disciple, Sam Bankman-Fried. The letter of the acquisition intent by Zhao's Binance Holdings came after a bit of feud between the two men, split out into the open, with Zhao actively undermining confidence of FTX's finances and helping spark an exodus of users from the 3-year-old FTX platform or exchange. A day before reaching a deal, Bankman-Fried said Twitter that assets on FTX are fine. So in amongst all of this kind of stuff, a lot of users started removing themselves from FTX, their holdings. It's causing a bit of a bank run. CZ obviously saw those opportunity to come in and offer to buy and then subsequently create liquidity to FTX and stabilize everything. But he did do it conditionally. And so the two founders made the announcement on Twitter concurrently. To protect users, we signed a non-binding LOI, letter of intent, intending to fully acquire FTX and help cover the liquidity crunch, Mr. Zhao said, Mr. CZ. A huge thank you to CZ, Binance, and all our supporters, Mr. Bankman-Fried said on Twitter. Our teams are working on clearing out the withdrawal backlog as it is. This will clear out liquidity crunches. All assets will be covered one-to-one. This is one of the main reasons we've asked Binance to come in. So at that point in time, it looked like a bit of stabilization, and you saw Bitcoin go back up to about 19,000 from 18,000. And then only about 12 hours later, 24 hours later, the deal for leading cryptocurrency exchange to Binance to buy FTX has collapsed. As bigger rival Binance said it was pulling out after doing due diligence. It didn't take too long in the due diligence, let me tell you that much. After going through due diligence at a much lower amount of money, like call it 10 to 20 million, and taking a few months, if you're already finding out within 24 hours, it's like rot roll. Binance signed a non-binding agreement on Tuesday to buy FTX's non-US unit to help cover a liquidity crunch at the rival exchange, but the deal was subject to further due diligence. As a result, corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged US agency investigations, were decided that they don't want to touch that with a pole, basically. And then Bankman-Fried came out saying, we obviously just saw Binance's statement. Bankman-Fried said in the message, they relayed that to the media first, not to us, and had not previously informed us or expressed those reservations. I'll keep fighting for those as best as I can as long as it's correct for me to do so. I'm exploring all options. Bankman-Fried also told investors on Wednesday the cryptocurrency exchange needed emergency funding to cover a shortfall of up to $8 billion US dollars due to withdrawal requests received in recent days. The withdrawal requests were driven by speculations on FTX financial health. And so there is a timeline. So I'll wrap up there. And Arnie, throw to you for further thoughts, opinions, additional bits of information, anything you've got, mate.
Yeah, I was having a bit of a chuckle there throughout the different parts of it. And it's funny, the parallels between the Luna and the FTT token. In particular, like Bankman-Fried tweeting out, things here are fine. I think Dokkan also tweeted out things here are fine with Luna and whatever it was. Yeah, go on.
There's actually a meme, a really good. I'm going to put a few memes. So for those on the video, you'll see a bunch of memes. The CZ that did, but one of them was he put up Sam Bankman-Fried in that kind of "this is fine" with the house burning, dog drinking the tea. He scored him, and he also put up another one saying, "I'd love to." I'd love to make donations to political parties, drive Ferraris, and have my sponsorship details on stadiums for this FTX stadium. Oh. But I'd rather just get down to business and hire employees. And I was like,
brutal. Yeah, a few points. I also had a chuckle when you were mentioning. Did you say Enron or did you say Bernie Madoff? Either
Enron.
way.
I mean, either way, you mean.
Yeah, either way. It's like I was having a laugh because I saw this tweet that a mate of mine shared earlier where someone was sort of saying, I can't believe there's not going to be a bailout for this $8 billion gap, and basically saying it's absurd and it's going to ruin people's lives, and it will ruin people's lives. When you look at the history of these sorts of schemes, you got like General Motors in 2008 needed a bailout, Enron, Bernie Madoff, Bill Huang with Tiger Capital, and this is all credit to my mate King, and he's the one who pointed this out. But I thought that was funny. And just lastly on this issue with FTX and their collapse, I think it just sort of goes to show you that like these companies who are so hot right now, if they're not taking care of their risk management of their assets, it's just a free for all in just loose. I don't know, loose behavior. I don't know how else to describe it. Like it just sort of seems like they were just flying too high, flew too close to the sun. Interestingly, I saw this tweet, and it's sort of been doing the rounds, where it was saying that if you had have taken all of the advertisers from last year's Super Bowl, like the Super Bowl that happened at the start of this year, and shorted them with $1,000, you'd be a billionaire right now. And it included names like FTX, it included DraftKings, it included I can't remember now who else, but like a lot of crypto and a lot of like high growth tech companies that have just really suffered.
It would have been it would have also been sorry Jimmy if you're listening to this, but what's that bank? Safe Sophie.
Oh, SoFi, yeah.
SoFi. Sorry, Jimmy. I know that's a really sore point at the moment. But,
I got the list here: FTX, Carvana, DraftKings, Uber Eats, Meta, Oculus, Rocket Mortgage, Coinbase, Vroom, Salesforce, GM. So yeah, $1,000 into leverage with puts, you'd be a billionaire right now. So let's just all pay attention to who's advertising at the Super Bowl next year.
Don't even get me started on Carvana. That's another one I'll have some fun with one day.
And Open Door. Have you played? Yeah. So anyway, FTX. So good. FTX. That was a really good timeline, mate. And so
yeah, hopefully that kind of at least gets. I mean, a lot of people there's a lot of stuff out there, and people are hearing it, and they're like, crypto's gone. Bitcoin's down to 16,000 US. Things get affected. So when there is something of this size, you're talking about tens of billions of dollars. Things have a way of kind of hitting the index. Yes, Arnie.
I forgot to mention, there's a rumor that Sam Bankman-Fried's on the run. Have you heard that?
Doesn't surprise me because that's what they all do, and won't surprise me if, like everyone, whether it's Sri Lankan ex-presidents or it's Do Kwon or it's whatever, they'll end up in Dubai.
And Do Kwon was on Twitch the other night with Martin Shkreli, and he said, "What's jail like?" And Martin Shkreli said, "No, mate, it's not that bad." So, yeah, I don't know. It's like, anyway,
mate, he'll end up in Dubai. I've got no. Let's have a look. Sam Bankman-Fried on the run. Let's have a look.
Yeah.
He's lost $15 million and he's
15 billion, yeah.
15 billion, yeah, and he's he's on the run. There you go. No one knows where he is. I mean, if it was me and I just lost $16 billion, I'd probably be on the run as well. No, just joking. Fucking above board individual, take it on the chin and go to jail. So that's FTX and Binance Saga. Quick chat, midterms. So I know let's just do a quick midterm 2002 electoral update.
Yeah,
let's have a look at where they are right this second. Because look, having lived in the US, I admit I am a little bit. I may have been a bit obsessive watching this yesterday. I think one of my mates was like, "You love this, don't you?" And I was like, "Well, it means a lot for the US and it means a lot for the global world." So, global world, geopolitics and global affairs, I should say. But I mean, in the Senate, they're going to have 51 for majority. It was supposed to be a red wave. And so the big takeout for me is Donald Trump was going to announce next week or the week after that he was going to start running. And the whole idea was he was announcing this early because he is the one who orchestrated a bunch of the Senate runoffs. So the people that are actually in there, like Dr. Oz, Walker, Kara, a bunch of them. It's about half the senators that were up for running were Trump-approved senators. And it was supposed to be a big red wave. I mean, everyone was thinking it was going to happen. Well, not everyone, of course. Majority of people, I should say. And, I mean, even though it's not over yet, they're still counting, the Republicans may still take the Senate and also the House. It's looking now like 70% that the Democrats are actually going to hold the Senate or pick up one, which is very interesting.
Yeah.
Especially with the runoff in Georgia. And the House looks like it will go to the Republicans, but not by a huge swing. So they'll probably only have it by a few seats, most likely. And so what does this mean? Tankers, other than boring political speak, at least from my point of view, this means that I guess the US is still very much a democracy in terms of it's not just one way now. So it's not like everyone is believing that everything that Biden and Democrats are doing. Personally, I thought the Democrats just gave this one to the Republicans, like they're wide open, and they missed the layup. What does it mean? It means that like Biden may not be a lame duck for the remainder of the next 2 years before the presidency. It means it may put a lot more questions into account around Trump's, I guess, primary candidacy in the Republicans and his run for 2024 and what that means for world politics and kind of economy. It means we're probably going to see more of the same that we've seen over the last couple of years for the next couple of years, with maybe a bit of a watered down if they take the House or the Senate. But not too much, not too much of a knee-jerk reaction from where we are today. And so markets haven't necessarily liked the results at the moment. So in the US, they tumbled kind of on inflation fears. And I think Arnie will be talking about some inflation stuff coming up.
Yeah.
Because it's not like the government has been helping out with inflation too much. But anyway, that's my thoughts. Arnie, your thoughts?
Yeah, my thoughts on midterms, you pretty much hit the nail on the head. I think PA being a bellwether state and Fetterman getting up over Oz was huge. I think another massive news story was Ron DeSantis in Florida, like crushing it as governor.
Crushing it, which will, I mean, you got to think to yourself, say, hey, look, Trump put in these senators and they all got nailed. I'm here. I'm leading by like, what was it, like 25 points or 50?
Oh, it was like a 20-point lead, and it was huge. And with previous Democrat voters as well, so everyone loves him there. And interestingly, I've heard like some different commentators say that they think it could be a pairing for Trump's 2024 run. with having him as the VP. But then I've also heard people say like DeSantis would be mad to associate himself with Trump, because then if he's even manages to stick around for 4 years, when he wants to run for himself, he'll be tainted by Trump politics.
Correct.
So
no, 100%. So there's a big thing that basically there'll be an unstoppable force, and that it was going to be organised as a handover because Trump could only do one more term. Yeah. But seeing as though the last week Trump has been attacking DeSantis left, right, and centre, because he sees him as his biggest political rival, I wouldn't be surprised out of this. I mean, if DeSantis actually, is a new voice, because he's like Trump without the. So it's Trump in terms of a lot of his views, but without the divisiveness and the hate speech and the rest of it. So
and he's a professional politician.
Yes, he knows what he's doing.
Yeah. So he's like interesting. I think it'd be interesting to see if he runs against Trump or if he waits.
Does governor of Florida for another 4 years, lets Trump do whatever he wants to do.
Yeah.
If Trump gets in. But look, interesting on the midterms, and we'll talk about it a bit more once it's known, and just kind of its impacts of again, all this stuff is just news to be aware of, because it does affect stuff.
I was looking. Scale. Oh, give me $2 for that one. But I was looking the other day about in the lead up to US midterms, six months prior versus 6 months afterwards, and how the stock market does. And traditionally, since 1946, 17 out of 19 times, that's not counting this one, I don't think. It's been down. The stock market's been down in the 6 months prior, and then has rallied and been up in the 6 months afterwards. So doesn't happen every time, but it's a very strong trend. And I would be surprised if that didn't continue, if you think about what would happen over the next 6 months. But then again, you and me have been obviously sort of paying close attention to what we think is coming. And I think, if you're looking at it at over 12 months, it would be a different story again. So
100%.
Yeah.
And quick fire news. Let's fire them out.
Yeah, I got a few here. We might have actually covered a few, but I'll just sort of go over them again. So Biden has been quoted as saying the US is not near a recession and needs time to cut prices. And Bloomberg's reporting that this could mean it's a hot CPI number because the White House gets the numbers a day early from the actual public. Musk has said that Twitter could potentially offer money market accounts and peer-to-peer payments. And I think they've applied, but not yet received permission to have to be a payments platform. Bitcoin, as you referenced earlier, has extended its losses and it's fallen below 16,000. Evercore's Emmanuel has warned that the Bitcoin plunge may take stocks to lows because of margin call selling. And Russia has ordered troops to pull back from the city of Kherson, which is interesting development, and fingers crossed for peace in that region. Russia's Putin is going to skip the G20 summit in Indonesia next week. So wondering about that.
I won't get to hang out with him.
Yeah, well, you could go and try and. You won't get to hang out with him, but the other world leaders you might. Stand a chance.
Me and Z will just hang out in the pool,
just hanging out, having a bintang. Meta has done 11,000 layoffs and potentially more, and on top of that, tech jobs. We've got 45,000 tech jobs have been eliminated before the cuts at Twitter were announced. So among those tech layoffs, you've got rideshare company Lyft has dropped 650 jobs, or 13% of their workforce. Payment processor Stripe has dropped 1,120 jobs, or 14% of their workforce. Shopify, 1,000 jobs, 10%. Snap cutting 1,000 jobs, which is 20%. And Coinbase, 1,100 jobs, 18%. So, yeah, and just quickly on that, and this is an article that you linked, Brad, but Meta, Apple, Amazon, Microsoft, and Google, so FANG plus Microsoft, have announced that a combination of cost-cutting programs and hiring freezes, they have lost an approximate $3 trillion on the stock market since beginning the year. So a lot of money wiped off, indices from those big players. So I actually watched a video from Kathy Wood from ARK the other week. It was called
Kathy.
Yeah, I know she gets a lot of hate, and she was sort of being praised as the next stock messiah during 2020-21, and then when the sell-off started, now she's getting berated by everyone.
Then again, if stagflation comes, she'll get back in. She made the right call there, and then this stuff ebbs and flows, right?
Yeah,
nothing's ever linear.
I try and get as many viewpoints as I can from as many
100%.
sources, and she had a talk about, which she does regularly on her YouTube channel, but this one was called Defanged, actually speaking about those particular stocks, which I found her take interesting. So don't necessarily agree with it, but it's interesting to understand, where people are coming from. So that's the rapid fire for the week, mate.
Right, fine. We're going to have 50-50. It's not really 50-50. I've got it up.
Oh, I had one too. Did you have one as well?
Oh, I had one as well. Yeah, we'll both come in.
2 for 1?
Well, we could do the 50-50 of who's actually going to do, who's 50-50 we're going to do.
No, let's do both.
Inception. Next level.
Very meta.
So mine was not really 50-50. It's more like 2020, 2020.
Okay.
Desserts out of s'mores, carrot cake, cheesecake, apple pie, or brownie. Apple pie includes ice cream.
That is so hard. That is one of the hardest choices you ever put in front of me. Does the brownie also include ice cream?
Does. Vanilla. Vanilla ice cream for both.
Ooh, all right. I'm gonna have to choose the brownie, and that's a hard call for me because I love cheesecake, man. So it's like brownie and ice cream is like, whew. If it's a good brownie and it's heated up just a little bit, then the hot with the ice cream, it's like, yeah. What about you?
I'm an apple pie. So a good homemade apple pie with vanilla ice cream. Push was
number one.
Yours? What's your
well, my 50-50 was topical. I was going to say, if you were, forced to invest $1,000 right now, would you choose Bitcoin or Ethereum? And I'm only giving you those two choices, knowing that you have serious thoughts about other cryptos. I'm purposefully asking you about those ones.
Yes. Because I would have probably picked either. But if I could pick out of Bitcoin or Ethereum right now, I think Ethereum's trading at about 1,300 or something.
I think it was down like 1,100. Or maybe it's coming back up.
ETH today is the AUD. I'm looking at no AUD.
I've got it here.
1140.
1140, yeah.
I would be going in at Bitcoin at 16. And the why? Yeah. If ETH was down kind of near all-time lows of around 800-900, I'd be getting into ETH. But I think Bitcoin for me is always just going to be kind of around, and so is ETH. But I think Bitcoin will play a bigger part in the next medium term than ETH will. I think ETH longer term will. So yeah, I think there's probably more upside on Bitcoin in the medium term, and that's kind of where at the moment my investment foresight is kind of more the 3-4 years at the moment rather than 10 years.
No, it's well rationalized. I like that. I'd be happy with either, but I'd take the opposite side of that. I'd take ETH, and it's because you actually hit the nail on the head. It's because I always take that longer view. Like I'm always thinking 10 years out, and I just feel like that one. Aside from the other ones which we've talked about and I've looked at a bit, which is ADA and Polkadot and whatnot, I feel like ETH is represents the best use case for all cryptos, in my opinion.
For a lot of utility, yeah, no, 100%. And like I said, if I was taking 5-10 years, I'd pick ETH. But yeah, my investment horizon is lower at the moment.
Well, mate, have a Bitcoin with your apple pie, and I'll take some ETH with my brownie, and that's good. and we do that because we're just highlighting that everyone's different, everyone has choices to make, and as in investing, as in life, So
indeed. Well, hopefully, people have enjoyed a slightly maybe reduced version. I think we're down in 30 minutes, under 40, which is good.
Yeah.
And otherwise, I'll just make it so via editing, and make it so. Take us as usual, comments across the tubes and the socials. Hit us back. Thank you for the amount of views, I guess, on the 50th episode. It felt nice. People chimed in and hopefully enjoyed the Cricket Bat 50 and a bit of video editing there. It took a few hours to do about 7 seconds worth of video.
Worth it. I love it. So
but Arnie, I love catching up as usual, mate, and we'll speak soon.
See you soon, brother. Bye, takers.
Okay, so subsequent video. What I'm going to go through is just a bit of a timeline since what's happened over the last few days. Part of my voice, a bit sick at the moment, but we'll soldier on so we get this video out. So I'm going to go through the timeline, and then I'm going to go through some just additional interesting facts that are popping up. Do with it as you will, but just very, very interesting stuff that's coming out. All right, so 9th of November, Binance has pulled out. crypto markets who see a red. Sam Bankman-Fried comes out and tells investors that there's an $8 billion hole and requires basically that emergency funding coming in to cover the liquidity crunch caused by user withdrawals over the last few days. FTX website urges against depositing, unable to process withdrawals. Blockchain data suggests that FTX may have resumed withdrawals. So interesting, keep track of this one. So $469 million at the time of publication show that money started coming out of the exchange wallets. FTX US announced that it may halt trading on its platforms in a few days. So this was Sam Bankman-Fried coming out on Twitter saying that there is no relation between, I guess, FTX and FTX US, separate entities. And so that kept actually some people keep utilizing FTX US. Then FTX assets frozen by Bahraini securities due to suggesting that their clients' assets were mishandled. Then Bahamas-based FTX account withdraws millions of funds for other users using NFTs. So they came out, FTX, and said that it was the Bahamas government that was basically forcing them to sell and withdraw information to protect citizens of the Bahamas. FTX liability is roughly about $8 billion, so that continued on. FTX US, and Alameda filed for Chapter 11 bankruptcy. So obviously, FTX US was involved in the FTX, and that includes 130 other companies. And I'll go into that in a bit of time. FTX US suspends withdrawals, and FTX Ventures head resigns. So completed all withdrawals across the US. So FTX US. Then a day later, even though withdrawals were suspended, suspicious move of FTX funds flagged. So in the end, about $900 million in total was hacked. So confirmed on the 12th, hacked. And this was via the apps that FTX had. And supposedly there was malware within those apps that had been existing for a long time that allowed someone, someone internal that knew of the code to basically bypass everything and withdraw money from to the Bahamas-based wallet. Can't make this stuff up. SBF is under supervision in the Bahamas. There was some news stories that on the way to Argentina and the rest of it. He will try and get to Dubai if they let him, because there's no extradition treaty with the US, and that's where everyone runs through, like the Sri Lankan ex-president and the rest of it. And then the regulator in the Bahamas came out and said, no, we never allowed any withdrawal for our Bahamian clients. It was all a lie. So basically, there's been hacks. There's been money withdrawn and told the Bahamas, said FTX US wasn't in trouble. It is in trouble. It's Chapter 11. And so this has just come to destroyed all credibility that was left, and has caused an absolute contagion effect throughout the industry. What you're seeing now is pressure on like other lending platforms and countries that other crypto platforms had like 10% of their holdings in FTX, and the contagion is still kind of being figured out at the moment. A little bit small bits of information that are quite interesting, which, I mean, in hindsight, everything's amusing, but first one, meet Caroline Ellison. She is the CEO of Alameda Research. I think she's 27 years old. This is her spec. So, yep, she was a research analyst. She was a trader at James Street, which is where SBF worked for 2 years. And then worked at Alameda Research, and she went from a trader to CEO of an $18 billion hedge fund. I'm going to put in a video now, just and for any of those that have any sort of financial understanding, just enjoy this 40-second video.
Yeah, absolutely could pull it off without my math degree. Use very little math. Use a lot of like elementary school math. Being comfortable with risk is very important. We tend not to have things like stop losses. I think those aren't necessarily a great risk management tool. I'm trying to think of a good example of a trade where I've lost a ton of money. Well, I don't know. I probably don't want to go into specifics too much with that.
Hope you enjoyed that one. This is Dan Freeberg, who is a regulatory officer at FTX. And Dan's an interesting guy. Do your own research into Dan. He keeps scrubbing the internet of all his stuff. But any poker players out there, there was an ultimate bet scandal back in the early 2000s. It involved a lot of poker players, but basically involved the biggest online casino at the time, Ultimate Bet, creating accounts which would allow the person who was at the poker table to see everybody else's cards, and was found out as professional poker players that was stole, $30-40 million of other players. Ultimate Bet kept trying to take some money in to fix their financial problems. And Dan Freeberg was the lawyer who was caught on video actually trying to help them basically lie and how to get out of it. And so he set up that whole scam, and looks like he's pretty much probably behind this one. So another one, really, again, I said this rabbit hole. Look up Dan Freeberg. It's very interesting guy. These are 130 companies that are now either insolvent or will be impacted. It's really sad. I've kind of watched some videos from some people that have used FTX to make an element of research to make the market plays and get their project off the ground. And there's some really, really good projects in here. But because they've been tied up with FTX and either we're utilizing his platform, we're funded by the FTT token, we're a whole bunch of stuff. Looks like a lot of these are going to be in trouble, with one of the big ones being Solana, which I'll go into in a bit more detail. We got Polygon, which is a huge one. The Matic, I guess other people would know it as. Phantom Coin. SPF was behind a lot of like Near Protocol. Was behind a lot of stuff in crypto, and because of the approach that he took, he's going to take a big chunk out of some really, really legit companies, which is quite sad. Some other just tidbits of information that are just interesting. So FBF was funded by the biggest VCs in the world, and this kind of story is that he was getting funding playing League of Legends in the meetings. He's the second biggest donator to the Democrats. He also put money into Republicans in the US. He recently put $40 million into the midterms, but he was the second largest, biggest Biden donator at $40 million. I'll get into that in a second. Looks like there's the FTX Alameda crew, 10 of them, all lived in a $40 million penthouse together, which has just gone for sale. Alameda Research, Caroline and him were kind of on and off, but they're all on and off together. So that penthouse is up for sale now for $40 million. Interesting life. This is where it gets like a bit interesting, and this is not going down the rabbit hole as in like conspiracy theory. This is like confirmed stuff. So he's been meeting with Gary Gensler, and you realise we've probably talked about him a number of times, which is the head of the SEC, who's currently kind of cracking down on like XRP and crypto. So he's met with him a number of times, which is via Gary's public calendar. And so there's that connection. And Gary says he meets with people from the industry all the time, but gets a little bit more. So Glenn Ellison, who is the head of economics at MIT, is Caroline, who was the CEO of Alameda Research, dad. Gary Gensler and Glenn Ellison worked together. So one was head of economics, another one was the head and former professor of economics, who is the SEC kind of head now. So then you've got Caroline Ellison, who obviously is the CEO of Alameda. You've then got Barbara Fried, who is Sam's auntie, who is the head of the Mind the Gap, the biggest Democrat PAC, or basically money-giving political lobby kind of a corporation in the US. You got Joseph Bankman, his dad, which is a federal tax law creator. And you got Linda Fried, who's aunt, not his mother, who's a member of the World Economic Forum, who's against crypto. And so it's just a very incestuous, you've got MIT economics, you've got Gary Gensler, SEC, you've got the biggest pack in donations, you've got the biggest VCs giving money, just even though he's playing games in the thing. And so now you've got Elon Musk, putting up some funny and calling out some of this. So this is not like conspiracy theories. It's like, obviously Elon out there kind of giving it a little bit to the SEC at the moment over, a bit of a relationship going on here. And this guy's supposed to be basically the head of the regulation. So some interesting stuff there to watch. And this is just the basic architecture of a flywheel scheme, which is what Alameda Research and FTX used, which was FTX created a token called FTT. Alameda Research bought and traded FTT, which allowed it to increase its price. It then would use the FTT token as financial backing, showing, hey, look, this is now worth $6 billion of what we own, to then use that to raise cash through equity sales. So they went to FTX and went, okay, can we borrow some USDC, which is a stablecoin, and we're going to use our FTT token to basically fund or show the capital to borrow that off you, and then use that capital to buy more FTT, increase the price, use that, and this circle just goes around and around and around. So I'll put it up there, press pause if you want a bigger kind of donation, but that's literally, it creates this wealth out of nowhere, but does come unstuck very quickly, as we can see how that it has. And I won't go into this one too much because it's quite technical, but this is like one of the biggest problems with, say, Solana, because the Solana ecosystem wrapped in Solid tokens named SoBTC, which is used widely across lending and AMM platforms. Basically, these tokens were launched early by the Solana DeFi cycle to help generate liquidity in the space. There's no form process and no one knows if FTX still have underlying assets, and it come out that they do. Basically, this is used as collateral, and so we may see, it's going to be interesting to see what happens to Solana, not just because their association with FTX, but because the way their association was. So I'll leave this up again if you want to have a read of it. But look, that's what's happened. I'll keep this as short and sharp as I could because I know they've gone over, but just thought I'd keep everyone up to date. Hope you enjoyed this, and see you next week for 52.